Let me paint you the full picture. What's happening right now is nothing short of a financial revolution. Last year, Wall Street thought they had won. With the launch of Bitcoin ETFs like BlackRock's IBIT amassing over $70 billion, the establishment celebrated bringing crypto to heel. But today, the script has flipped in ways nobody anticipated. The cryptocurrency exchanges aren't just defending their turf anymore, they're launching a full-scale invasion of traditional finance's most sacred ground, stock trading. Kraken's new X stocks platform and Bybit's USDT-denominated stock trading represent the opening salvos in this war. Suddenly, you can trade Apple, Tesla, and Nvidia shares 24/7 using stablecoins, bypassing traditional brokers entirely. Hi everyone, I'm Lily, your resident Wall Street rebel with a knack for calling out the market's BS. Why does this matter? Let's break it down properly. For years, Wall Street viewed crypto as the enemy, a threat to their payment systems, their lending businesses, their entire financial empire. But something changed when BlackRock realized they could make billions from Bitcoin ETFs while providing the crypto market with much-needed dollar liquidity. It was the beginning of an uneasy alliance. Now, the crypto world is returning the favor by bringing liquidity back to traditional markets through tokenization. Take Berkshire Hathaway's Class A shares at $760,000 apiece. They're out of reach for most investors, resulting in pathetic 0.03% daily turnover. Tokenize those shares into $1 fragments available globally 24/7, and you've suddenly unlocked trillions in trapped capital. This isn't just theory. Boston Consulting Group predicts tokenized assets will hit $16 trillion by 2030. For context, that's larger than today's entire U.S. stock market. The implications are staggering. Chinese investors, locked out of traditional channels since regulators clamped down on apps like Futu, can now access U.S. equities through crypto gateways. Markets never close, Tesla tokens trade around the clock, creating constant price discovery. Fractional ownership brings millions of new participants into equity markets. But here's where it gets dangerous. When Tesla token holders in Asia react to news while U.S. markets are closed, the underlying stock will gap violently at the open. Remember how meme stocks like GameStop could swing 50% on Reddit hype? Now imagine that volatility amplified by 24/7 global trading. This explains Trump's sudden crypto embrace. Facing a $6.5 trillion debt maturity wall and a Federal Reserve reluctant to cut rates, he needs alternative liquidity sources fast. Tokenization represents the ultimate end run around traditional constraints, a way to tap global capital pools while maintaining dollar dominance. The playbook is becoming clear. First, legitimize crypto through ETFs and political support. Then harness tokenization to funnel global liquidity into U.S. markets. Finally, regulate the ecosystem to ensure American control. But make no mistake, this revolution cuts both ways. The same mechanisms propping up markets today could trigger unprecedented volatility tomorrow. When tokenized trading volumes dwarf their underlying assets, who's really setting prices? When stablecoin issuers like Tether become de facto central banks, who maintain stability? These aren't hypotheticals. We're already seeing the first tremors. USDT's $114 billion in Treasury holdings makes it a major debt buyer. 24/7 crypto trading creates pricing disconnects from traditional markets. Regulatory battles loom as jurisdictions wrestle over control. For investors, this presents both tremendous opportunity and unprecedented risk. The liquidity surge could extend the bull market for years, but the volatility may shake out all but the most disciplined traders. As your guide through this new frontier, I'll leave you with this. The financial system you knew is gone. What emerges next will be wilder, more global, and more democratized, but also more fragile. Position accordingly. If you found this deep dive valuable, do us both a favor, hit like, subscribe, and sound off in the comments. What's your take? Is tokenization the future or a ticking time bomb? This is Lily. Until next time, stay sharp.